Trading Market Technicals morning call video for Tuesday, May 14th. Well, the markets paused yesterday. Dow down 26, S&P up a few cents, Nasdaq up $1.50. Dollar actually paused after its nice little explosion to the upside, down ever so slightly, and gold ended up being up $1. Now, gold's going to be interesting because we did break the 1444 on the weekly chart of the 200 bar moving average, and that's something that we're going to look for some shorting opportunities. We are down right now in the pre-market, trading at 1430, so gold actually triggered a short sale. If you are interested, and we'll cover that in a moment. But I want to cover is that we do have options expiration this week, and we want to see where the max pain is, where the markets would inflict the most pain to call and put buyers. And right now, as you can see here, and this is just, take it if you will, a little grain of salt, but as you can see here in this section, puts out number of calls 2.2 to 2 to 1, about right about the same from last month. Call open interest is the highest at 150, between 155 and 165, and put open interest is the highest between 140, 142, and then of course 150, 145 and 160. Excuse me. So the bulk of the overlap is between 155 and 160, but puts do dominate, as we know, as you can see, because everybody's looking for a top, and what we want to close would be the upper part of the zone to cause the most pain. So today's close was around 163.54, was well above that range, and as of now, some of the call buyers will make some money, and put buyers will lose nearly, pretty much mostly all of their bets in that area above 160. So the calls outnumber the puts, so a move down, it would be needed to cause really the most pain. Okay, and that would allow some put buyers to make a little bit of money, but even more call buyers would lose. So we want, really quickly, for the recap in the max pain, we would need a move down between now and Friday to cause the most pain, because we have a lot of obviously call buyers in the market. So now that is the diagnosis of the max pain. Now, why is this interesting? Because you want to know what the option markets are kind of pricing in, and we are in options expiration, which generally is a bullish time of the week, right? We are Tuesday. Now, let me just tell you about Tuesday. Since the new year, there have only been 2 Tuesdays that have closed in the red. 2 out of the whole year of 2013. It's pretty amazing, pretty crazy stuff. We are at all-time highs. Every day we keep ticking at all-time highs. Is the market extended? Yes. Is the market overbought? Absolutely. Do we see a top? Not even a chance. The markets can continue to go up as much as I would love to see a pullback and a correction, which I think would be much healthier for the markets instead of just grinding up, because when the markets do pull back without any sort of a pullback or consolidation, the markets tend to be nasty on the pullback down. Pretty scary, because everybody is buying up at these areas thinking the market's going to go to 1700 in the S&P, and could it? It sure can. You just don't know. So what would be the best trading tactics? Well, if you're long the market and you are holding positions, or you're just a long-term investor, just tighten up your stops or buy protection. And even though protection is insurance, like an insurance policy, made to be gone, right? You're expected to lose that money, but you are still in the trade. And that what I say is that if you are a big bull, or perma bull, then you would want to continue with your portfolio, but definitely I would suggest either tightening your stops and picking a spot, saying, okay, if the markets break this area of the S&P, I'm going to liquidate my position and then reevaluate it again, or maybe sell half. It depends on what your money management and trading plan would be in that portfolio. If you are day traders, just need to really tighten up your stops intraday. And don't get greedy, don't get stubborn, because in this type of market, really the moves have been 9:30 to about 11:30, and pretty much the day is over. It's been a slow grind. It's I'll tell you, it's very difficult looking for stocks that are moving all day, because the moves happen generally in the opening, and then pretty much they consolidate the rest of the day with another little pop up and or down at the close. So if you're day trading, there's not a lot of activity to be had. However, you still can make money in this market, and it might be less trades, but you could still make money if you have discipline and if you have a proper money management and risk management plan in place to trade this type of market until, of course, the markets can correct itself and volatility comes back into the markets. Okay, so let's go to a few pictures I want to show you here. We have copper, right? Now I've been saying, okay, copper is obviously selling off since February, right? We had this little area here and sold off. Markets just really have totally ignored it. And eventually, something's going to give here with copper. Either copper is going to start to explode to the upside and follow the equity markets, or the markets are going to follow copper and start to roll over and start to sell off. Now, divergence have not been really the thing lately, right? Divergence has not been working out in the markets. There's plenty of divergence to be had, and I could find them all over the place in the markets, but they have been totally ignored. So it's easy and a better bet to say, let's see what happens with copper, continue to monitor what copper does, and if copper starts to break down and really starts to take out some lows, I think that cannot go unnoticed. So that's something that we want to look for, in the coming days and weeks to see what happens. That being said, let's talk about the dollar. Now, we had a nice explosion of this symmetrical triangle at the lows in this area, broke back out of it. We had a small bull flag. We did break back out again, and now we had this larger flag here, which I'm showing you, right? Here's the flagpole. Here is your bull flag, and now we are sitting here. We had a nice 3-day rally, and now we're consolidating at the highs here. So a logical pullback again in the dollar would be a good thing, and then a breakout. If the dollar were to break out, it will and probably create selling pressure in the commodity sector, commodity currencies, and precious metals, which would then advocate a great short sale for gold. Okay, and speaking of that, let's talk to gold. Gold in this area I've been talking about since last week. Watch the 1444 area, the 200-week moving average. We have now closed below that. Any rallies in gold will be probably a good short setup. So if you're looking to short gold, I would not be looking to buy gold. I would be looking to short gold on any bounce, especially if the dollar is holding in at these upper end of the ranges. That's when you want to continue to look for short sales in gold, commodities, commodity stocks, and or currencies. Okay, now let's take a look at the VIX. VIX here continuing to hold this area. Despite the markets are making new highs, VIX is not making new lows. Again, divergence. However, we could easily just break down to the downside. And equity markets can explode to the upside. And that really could be the case here. So we want to just monitor what VIX is doing during the day. Now, the VIX really hasn't been a great barometer, a read to the markets. I mean, they really haven't been of late, but I'm still watching it. I still watch, I follow what the fear factor is, and it's telling me, and the options market is telling me in the CBOE put call, that we do have participants buying puts for protection, ever so slightly. Nothing really big, but they are buying some puts. So we want to really just kind of monitor what's happening here. I do think that when you have a lot of people and traders looking for a top, it doesn't happen. It doesn't happen right away because the markets suspect that, and they want to markets look for creating the most pain. And when you continually have people buying puts and shorting the market, that just adds fuel to the fire for more upside. Until that's gone, that's when the market will top. And we don't know when. We will just continue to play the right trade setups, and that's really the best you can, the best advice that I can give anybody. As much as I want the market to come down, I am not just looking to short the market. I wouldn't be, unless again you had a situation like gold, which is totally different, and gold is breaking down again. We do have a massive sell-off a few weeks back. We retraced back 50% of that move, and now we are rolling over again, breaking the 200 bar moving line. That's a trigger, and that's what you want to look for. Okay, now let's go right into the equity markets here, guys. Really not much has changed. I'm going to blow through these charts. As you can see here, holding at the upper end of the range, at the upper end of the trend channel, upper end of this resistance area, bullish. Nothing wrong with it. Staying up in these areas, unless it starts to break down and make lower lows and lower highs, this market is still bullish, very bullish. And even though it is overextended, it's a very strong trend. 30-minute chart. Look at what day traders have to deal with here. Absolutely nothing. Another 5-6 days. So we have 1 day up, 5, 6, 7 days consolidation, probably another blast off up, and another 5, 6 days of consolidation. So no volatility at all whatsoever. That's the 30-minute chart. IWMs, little doji candle. Now the Russell is definitely the weakest of the two, but nonetheless, transports haven't been really leading as well, and I just wanted to show that to you here. As you can see, we still have an inside day for the last 4 days, right? We're still sitting in this area here, but they haven't really been leading, and Russell really hasn't been doing much of anything. It really has been the S&P and the Dow that's been chugging along here. More the S&P than anything, really. The Dow hasn't done much either. If you can see here, we just had a few spinning tops and some dojis up on top here. Again, still bullish. It just hasn't, it's indecision. So the markets are looking for guidance. The Dow Jones looking for guidance from the other sectors, stating, okay, where do we go next? So just keep an eye on this whole structure of these sectors, guys, and they'll give you some clues intraday of what's going to happen here. And here's Goldman Sachs. And it's pretty amazing how you have, we come from this bearish symmetry of lower lows and lower highs, right? And these pivotal lows, breaking pivotal lows, making low lows. We did break out of it. Now we're just sitting on top of the upper trend line. Again, bullish. And what does this look like? This looks like a bull flag. And with a bull flag in place at the upper end of the trend line, Goldman is probably going to break out higher. And that's especially when you have options expiration bullish. And here's your bull flag right there. So to me, a takeout of yesterday's high, actually 151, call it 150, 151. A takeout of that 151 area. Look for new highs in Goldman, at least to this pivotal resistance area of 157. Acting really well. And look at the XLF, as you can see here, holding the upper end of the range. Looking really good. There's nothing to say about it. I would not be looking to short banks, at least not now at this time. And here's Apple. Apple also looking okay. Apple can't get any sell side, any selling momentum to the downside. And what does this tell me here? Apple is consolidating in a bull flag. So this bull flag here, if you just take away this, let's get this out of the way. What do we have? We just have a nice bull flag pattern here. So this is actually bullish. If we take out this area, we probably could take a beeline to the 580-ish. 588, 590, maybe even 500 if everything starts to really jug along again. Okay, but nothing bad about this at all. Pulling on low volume pullback. So Apple right now starting to change some momentum to the upside here instead of this bearish pullback here. This move that we had, lower lows and lower highs. We did break this trend line, and now we're holding here in this bull flag pattern. So we want to look for a break above yesterday's high, and then at least a test of the 470 to a 488 target. So let's just keep an eye on Apple, but again, holding its own. SMH, we did get a little bit of a pullback in technology, but again, look at technology. We did have a massive run in tech. A pullback will be healthy. And lastly is the Qs, guys. Now, the Qs, to me, if the NASDAQ is at 2980, 2985, I always say, why not hit the 3,000 mark, right? That round lot number, and then reevaluate. So that's where I think probably the Qs are probably, NASDAQ is probably headed, is up to that upper end of that 3,000 range, and then we would reevaluate. Okay, guys, really that's it. Let's see what happens this week. Interesting stuff. But I'm looking for probably higher prices, at least for today. I would probably say that the buyers of dips are going to be out in full force, knowing that Tuesdays are a very, very good bullish day since we've been having, since the market, actually since the beginning of the year. All right, so just keep that in mind. Don't fight the trend. The trend is your friend. The markets are higher. Markets are in a strong bullish uptrend, and even though we are extended and overbought, believe me, that's not something to advocate a short sell up in the markets here. Okay, have a great day. We'll speak to you tomorrow. Take care.